TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, Friday morning. We got the S&Ps up by 18 right now. We got some inflation data pretty much in line with expectations through the PCE. We'll jump over to that in a moment, but it seems to, at least at this point, set the stage for a September rate cut. We got one more important data point. That'd be the jobs number 1 month from today, non-farm payrolls for the month of August. But nonetheless, PCE, the Fed's preferred inflation gauge, we'll get over to it, but you're talking about 0.2% on a monthly basis. And I think that 0.2% is 0.155. I think I saw that somewhere. So it's actually almost 0.15% on a monthly basis, pretty much in line with expectations. But nonetheless, we get the markets right now. A little bit of a trade to lower price towards the end of the session yesterday and this morning. You see the reaction, right? Not a huge reaction. You're talking about a range of about 10 to 12 S&P points. We're trading right now pretty much where you came into that number, trading up a third of a percent, up 20 points at 56.29. NASDAQ 100. And again, compared to the volatility we've been getting recently, that PCE data, not that important. It is going to be important to see the jobs number we get a week from today, because this market has started paying a little bit more attention to actually the strength of the economy versus the underlying inflation numbers, because I think that it's pricing in that there might be more chances of a surprise that could impact the Fed, the markets, a slowdown, a slowing economy. So you get the potential for Friday coming up, that jobs number. That's really where the market's paying attention. We got PCE, and why not? Let's get over to it. Fed's favorite inflation gauge's mild gain sets the stage for a rate cut, is how Bloomberg puts it. Getting into the numbers. PCE, 0.2%, the estimate 0.2. As I mentioned, one of these, I forget which one, was 0.155. I had mentioned that before. It's important. It's surprising they don't go to the second decimal point, right? Because 0.2 can be a region that goes all the way from, 1.5 up to 2.49, and if you're going to one decimal point. Nonetheless, year over year, 2.5 versus 2.5. The only one that was actually a little bit different, you get down to core PCE, a little bit lighter year over year, 2.6 versus 2.7, and real consumer spending a little bit above. So consumer spending above. If anything, you have inflation moderating even greater than that. Now, there were a couple pockets here. Shelter going up. Shouldn't be surprising. We saw that in the CPI as well. Where's my shelter number? We got a few different articles we got to pull up here. Yeah, maybe I was reading that one in the CNBC article potentially. All right, I'll get this one exactly. But shelter was up 4-something%. Excuse me. And we'll go over some of the other numbers. What I'd like to take a look at when we get CPI and PCE, check out the different weightings. All right, the ones that jump out in dramatic fashion. PCE, housing in the yellow, a much smaller percentage than for the CPI. In the PCE, housing is only about 15%. In CPI, it's 32%, right? Housing is 1 out of 3. In terms of a 33% portion of the CPI weighting. In the PCE, it only represents 15%, but healthcare is a 21% versus 9%. Financial is a bigger component as well in there. But yeah, those are the two big ones. So remember, housing not as important on the PCE, which is the Fed's preferred inflation gauge. And that, if anything, is one of the areas that continues to run hot. So you factor that in. You say cuts are probably coming in September. All right, so with that in mind on that data, we jump around some of the markets. Indices in positive territory, we jump to some of the commodities. How about it? How about that? What just happened at 9 o'clock on crude? Let's see. OPEC plus output plans. I think we just got a little bit of news as we have crude spiking from 76 to 73.86. That was right at 9 o'clock when I was coming on the air. Check that out. Look at that move. We're up to almost 77 yesterday. You're pushing $74 right now, coming into the long Labor Day weekend for crude. You jump over to gold. We have a little bit of a reaction to that PCE number. Gold a little bit lower. We're trading at $25.49, down by $10. We were within about $10 of all-time highs yet again. You back this up. And look at this thing just challenging those all-time highs. 25.60, the upper portion. We're bouncing up against that area. We're just off that area at 25.50 right now. We jump over to notes and bonds. Back to a 5-minute chart. So you see the reaction on that PCE data. Pretty interesting in terms of we actually get lower price and higher yield. We're talking about a 10-year yield right now of about 3.87%. 3.87%. I was listening to Bloomberg early this morning, and there was a gentleman, I'm not sure who it was, and he was talking about the 10-year. 10-year right now, 3.87. And his take was that we could go down to 3.4 with just a couple of light jobs numbers, as in if you really started to see some weakening in the economy. Excuse me. Pretty interesting to think. You know, I have those conversations with myself in terms of where the risk reward is when you get a 10-year that's down from 5% to 3.87. The Fed is in an area that's at 5.25 to 5.5. Pretty remarkable. We're still at 5.25 right now to 5.5% is the range the Fed has for overnight lending. They're going to come down at least 25 basis points on that September meeting, September 18th. But it is intriguing to think about, are rates really going to come down to that level? Now, you better believe it's possible, folks, okay? Because you don't have to go back that far, right? You look at this chart, and any area besides the last few years when the Fed's been in an aggressive hiking agenda, outside of the last couple of years, you go back any time until 2008, and yeah, the 10-year is actually dramatically lower. Now, people are making the case, maybe rightfully so, that that was a dramatic period in time where you had for a period of 20 years, 15 years, the interest rates were approaching a zero bound. Are we going to be in a higher for longer period of time? Well, we get to find out. We got the BCE at about 2.5% right now, which is pretty close to 2%. If there's lag still in this economy to slow it down, and you have real estate helping that out. Now remember, as the Fed cuts, real estate's going to get a little bit of a lift, but the Fed's preferred inflation gauge is the PCE, which is why I brought that up. And in the PCE, you only have a weighting of 15% for housing versus the huge weighting in housing in CPI. And the reason why, I've explained it before, if you haven't heard it though, is that the way you want to differentiate these is CPI is everything you are literally taking money out of your checking account or your pocket and you are paying for. PCE is when you could be consuming a product, but you're not actually the one paying for it. Best example of that is you get healthcare from your job, you're consuming that healthcare, but you're not directly paying for that healthcare, even though it's something you're consuming, which contributes to the buying power you have when it comes to inflation. Stay tuned, folks. We'll talk some equities. We'll take a look at some Lululemon, some different equities with their numbers. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets in positive territory with the S&Ps up by 22 points right now at 56.32. We're coming into the long weekend and jumping back to some of those PCE numbers that we have out here, digging into some of those numbers. You know, you take this PCE, okay, and you take the core, which again is the Fed's preferred inflation gauge, right? Core PCE. Now, the Fed has said they're kind of moving to the employment side versus the inflation side as to which one they're more worried about. But this is the reason why. The Fed's preferred inflation gauge, okay, the core PCE, which was up 0.2% on a month-over-month basis, if you take the 3-month annualized basis, 1.7%. So you take the last 3 months of core PCE, you annualize that number, and they have brought their preferred inflation gauge down to 1.7%. So you better believe they're going to be paying attention to that jobs number, because if this number is accurate and represents, you know, a long-term average of where we are, of where they've gotten, and this is probably some of the reason why you heard Chairman Powell at Jackson Hole that whatever verbiage he used, right, that he's confident that we are on the way to 2%. He's seeing data, something like that. There it is, 1.7%. You annualize the 3-month annualized basis, 1.7%. All right, that's all you got to know. And that's why the Fed is going to be cutting in September, and we'll see where they go from there. Yeah. Now, some of the numbers like I was talking about here. Shelter, okay? That's a big component that is rising. If you take out food, energy, and housing, PCE increased just 0.1% on the month. As I said before, I wish they'd carry this out to 2 decimal points because that could mean a lot of things in terms of where you are. But shelter has proven stubborn, up 0.4% for the month in July. Okay, but again, not as big of a component of PCE. So remember that when we start seeing, when we keep seeing these CPI numbers, they're going to be running a little bit hot. And it's not going to be something that the Fed is as worried about, which is the reason why they prefer something like the PCE, which is a greater representation of all the costs that are going into your daily lifestyle. Because even though you're not paying for healthcare, right, it is contributing, because if that is a higher cost of a good you're consuming, which it is, you're consuming that healthcare even though your business is paying for it, that's going to end up eating into your pay in some capacity, right? Because that is a cost that you're consuming. It's part of your pay, and so it matters. The point being, it does matter even though you're not the one paying out of pocket when it comes to something like inflation, which is the reason why the Fed prefers that aspect of things. All right, we jump over to some equities. Lululemon, we pull up their chart. Talk about some volatility, man. Down to 235 and up to 277, and it looks like we're going to open up about $8. But Lulu cuts guidance, misses sales estimates after a botched product launch, but nonetheless, it seems like they saved themselves to a certain degree. Maybe it was on a conference call. Earnings, they beat 315 versus 293. Revenue, a slight miss there by 2.37 versus 2.41 billion. They now expect full year revenue about 10.4 to 10.48 billion. They were previously in the 10.7 to 10.8 range, and the earnings are going to be a little bit of a miss as well. However, roughly in line with what Wall Street was looking for. Breeze through leggings. They pulled those after a wave of complaints. Breeze through leggings. Looks like they didn't do the design work there, and they're facing some competition. They are. You take a longer term look at this chart, though. Look at that, 516, 226. You talk about it, man. They are facing some competition. I don't think I've ever owned something by Lulu. Look at this. Man, that is crazy, right? Can you imagine owning Lulu coming into COVID? Everybody works from home and wears athleisure now, and you've made no money owning Lululemon. You got to say they dropped the ball to some capacity. I mean, it was quite a run-up coming into that, right? The prior year, you ran from the beginning of 2019, 117. You back this up even further. It's been quite a run-up there. You were trading at, what, $62 if you've held this equity for a while. But, yeah, look at that double top, man. Up at almost 500, up at 516 to start the year. And in a year when the markets just behaved extremely well, what do we got? S&P's up 20%, AI taking over the world, and you got Lulu down 50%. You're going to open up $6 on their earnings. But they do. They get a lot of competition. I mean, I just see it around in terms of seeing it on people. What is it? Aloe Yoga or that one. There's a lot of competition. It is amazing when you look at some of the retail giants, the Nikes, the Lulus, and how they face all this competition now. Nike on shoes, right? You got Hoka, you got Brooks. I love Brooks, actually. If you're in the market for any type of a walking or running shoe, something like that, Brooks has just tremendous shoes. Some of the soles on my shoes, you're talking about huge, but it's good for your knees. Pretty remarkable. You look at Lulu. Let's check out Nike as I say that. Yeah, look at these, man. Look at that chart on Nike. Hoo-wee. Yeah, same deal with Nike, right? Same exact deal with Nike. Not exact, up to 180 in 2021, but you're pretty darn close to where you were. You're at $83 right now, and we were trading at $83 in September of 2019, a few months before COVID. Not exactly the same deal. Lulu really should have benefited from athleisure, people not going into the office, right? You're at the same exact price, and they did benefit from it, but then they gave it all back, which is not really ideal, to put it lightly. All right, we jump around. NVIDIA shares trading at about 119. You're going to be up a couple dollars. We traded lower with the market yesterday, and we're going to open about a couple dollars higher. You jump over to Apple shares. They're trading about $230. Now remember, Apple's got their special announcement. It's either September 9th or 10th. that they make that announcement in terms of the details and the new iPhones. I think they're going to have watches out as well, and maybe some other product, maybe tablets. I forget what it is. Maybe just AirPods. Might be just products. Might be the phone, AirPods, and watches potentially, I think is what they're going to be talking about there. Then they'll start becoming available on September 20th in stores, something like that. It's going to be a super cycle, but remember, the market has known this for some time. Okay, you just traded from 160 to 237. You went up $70 on an equity that has 15 billion shares outstanding, which is a gain of more than $1 trillion in value over a period of 4 months. It's going to be interesting to see how Apple trades on that product launch on some of those numbers, considering, yeah, that is quite a number, man. From 164 to 237, and look at this. I mean, it's basically, what do? We did 124 up to almost 100. That was like a $75 run. Yeah, then you basically did it again. A to B, C to D, beginning at 124 in the beginning of 2023, taking us to 229. Stay tuned, folks. Markets in positive territory. We're coming back for the open.
Consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now up by 21 points. Going to be interesting to see. Might be a low volatility Friday. We're coming into Labor Day weekend, right? Seems like we've gotten over the hump of the PCE data. All we got to do is get through that jobs number for kind of smooth sailing. Things are okay. We got inflation at around, whether you're talking about 3-month annualized rate 1.7, okay, up to 2.5. That's perfect. That's right in the range of 2%. And can we maintain a healthy economy? That's the question, right? We've brought inflation back down. Okay, prices aren't going back down to where they were 4 years ago, folks. We got inflation back in the realm of 2 to 3% right now. Maybe even lower. 3-month annualized 1.7. If somebody was making a case, can you imagine, right? How far back do you have to go? I mean, a year ago, if somebody said, if they wanted to make the case to you that we have inflation running under 2%, that would be a very hard case to make. It is probably the case to make and the accurate case to make right now. But what happened to the economy? Are there strains on the economy? Is there lag? How is it held up? And how is it going to hold up going forward is the better question, I think, right now when you're looking at where equities are and where the Fed is going to need to go in the future. You jump over to the 10-year right now, down about 2 ticks. And as I mentioned, we're trading with a yield right now of 3.87%, the yield on the 10-year. Excuse me. All right, we talked about Lululemon. Yeah, we can talk a little bit NVIDIA. Oh, let's talk this one. This is a good one. So this is out a couple days ago. Yeah, a few days ago. But, you know, I hadn't mentioned it when it was out, and I was reading it last night. And, you know, you pull up Walmart, man. Walmart flat today, 76.40. But Walmart's just making new highs every single day, man. Look at this. We're 9 pennies off all-time highs right now, and we're -4 on the day. And the run that it's had this year, you don't often see an equity like Walmart go up 50% in a year because what do you have? You don't have the type of volatility that normally you have with a company like NVIDIA, right? Or a company like any growth company that's predicated on extreme multiples where that valuation can just rip one way or the other. And the run Walmart's in is pretty historic for the business they're in. Nonetheless, you get into it. So Walmart's at $76. You look at this chart and check out what they're going to be doing. I mean, you look at this. They're going to be competing with Amazon using the logistics system they've built for third parties outside of selling for Walmart. So if you sell for Walmart, okay, of course, they have services that can help third-party sellers. But now they're going to help third-party sellers, not even on just Walmart.com. They're going to help third-party sellers anywhere you want. They'll do it all because they have the services that can get it done. Yeah, including Target, Etsy, and even Amazon, right? But they're making use of the logistics system that they are spending capital money to build out and that they've spent money to build out. Extending its competition with Amazon deeper into the logistics arena by opening of its fulfillment services to merchants who want to fill orders from customers on platforms outside the retailer's own marketplace. Now, it goes even further than that, okay? It's going to launch on September 10th. They're going to fulfill online orders placed through platforms using plain brown boxes rather than the Walmart branded packaging, okay? But it goes deeper than that because they'll even, okay, it's going to start offering to handle imports on behalf of merchants from ports of origin in Asia. So you can ship things directly to Walmart from Asia to their distribution centers in the US, and then you can even have less than truckload or even full truckload shipments. So you can parcel that out. You don't need a full truckload. You can ship things in from China. They'll send it out to your customers. They'll ship it. They'll ship it in a brown box. I just found it pretty interesting. You're going to be able to do everything. For retailers out there, you're going to have some real options. And you can see why they're at the forefront, man. The efforts echo the strategy undertaken by Amazon, which has said more than 60% of sales on its websites are for goods sold outside by outside sellers. Yeah. Sometimes you run into some problems on Amazon in there, though. And this is a fine line here. I do notice you ever pull up Walmart.com and there'll be an item there that is priced at some inordinate fee. Sometimes I'll look up stuff for Tommy, right? You could even look up a little Spidey doll or something. And there'll be a Spidey doll available for $200. You say, what is going on? And it's just a third-party seller. They need to get a hold of the fact that they have rampant, like extreme pricing. that somehow pops up on some of those aspects if somebody's seen that again. So be careful on that, which is sometimes why third party, you just want to make sure you're getting the best product for the best buck. But nonetheless, it's going to, Walmart, they're in a good spot, man. I used to tell stories at the beginning of the pandemic when I would order things from Sam's and it would show up in, it looked like a box that had been recycled for 20 years with 7 different products in it, not packed well, bouncing around. That doesn't happen anymore from Walmart. They have improved their delivery process. And Sam's, I don't know if you use, the future in Sam's, I'll tell you, they have scan and go. So what you do is you have your app, you're putting items in your grocery cart. As you're doing it, you're just scanning each item. Let's say you have 15 items. You scan all 15. It's on you to get it done. And then you don't even go to checkout. You just hit checkout on your app. It pays for it. And then they do have, and that's where the technology is going to take over on this one, right? One job that's probably not safe is the person standing at the door on Sam's, randomly scanning a few items in your cart to make sure that you've paid for all the items that you show them the receipt for. But nonetheless, I love it because if you ever go to Sam's on the weekend, folks, it is a zoo. You go there on Sunday afternoon, it's a zoo a lot. Same with Costco, I'm sure. So what do? You just scan the items. I don't even go near the checkout, and I just walk out of the store, and I'm already checked out. And all that stuff's going to take over. But yeah, that's Walmart. That's Walmart technology. And you can see how if they're doing it at Sam's, now Walmart.com, Walmart, that's a different story. But those types of transactions are coming everywhere. And you're not going to have people at the checkout. You're just going to have, cameras somewhere scanning items in your cart. Make sure you paid for them. They see your receipt. It's all there. And you don't even go to a checkout anymore. But I tell you, I do that. And I walk out on Sunday. And there are 10 to 12 lines of checkout with 2 to 3 people in line at each spot, and they're going to spend 5 or 10 minutes sitting there pulling each item out of their cart. Now, listen, you got a million items. I don't know. It is what it is. But I just walk right out, and I'm like, why aren't these people all using the app? So get ready to adapt to technology, folks, because it's coming, and it's already here in Walmart. But yeah, pretty amazing. You want to ship stuff in from China, they'll take it in their U.S. ports, and then they'll package it, they'll ship it, they'll do it all for Walmart. All right, as we come into this break, you gold bulls out here, you commodity bulls, you're going to like this one. Bank of America, they're on board. They said, no, you don't need to buy 60-40 stocks and bonds. Swap that out. Give yourself some 60% equities and 40% commodities because we are just at the beginning of a bull market that is just starting is what the Bank of America strategists are talking about out there. You jump over to gold. It'd be pretty amazing if this is the start, right? But it could be, man. You look at where we are. Yes. Gold at $25.50 seems expensive. But remember, folks, 13 years ago, we were all the way up at 1900 already. We'll talk a little bit of gold when we get back, folks. Stay tuned. We'll take a look at some commodities. And yeah, check that out. Commodity prices well off the 2022 peak. We'll be right back.
In charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're going higher. S&P's up another 10 points. We're up by 30 right now. Trading at 56.40. There you see the action. We're above where we were pre-market right now. NASDAQ 100 trading up 170 points. You get the Dow up 130. You get the Russell up by 10. You jump over to NVIDIA shares. NVIDIA trading up 2%, up $2.44. We checked back in on gold. Gold down about $8.25.51. So what we're talking about, finishing up that gold conversation real quick. Basic premise, you're talking about the commodity bull markets just starting is what those strategists at B of A are talking about. The strategy usually is 60% in stocks, 40 in fixed income, but commodities may be a better bet in an environment of prolonged high inflation. The commodity bull market's just starting. The asset class is a quote-unquote better 40 than bonds in the 2020s. They might both do okay. We'll see. Nonetheless, you jump over to NVIDIA. Now, this article is pretty cool. So this article is from the Journal, and it's talking about that they are pushing the limits of technology. NVIDIA's future relies on chips that push technology's limits. As the company pushes the chip-making envelope, manufacturing hurdles are causing delays and higher costs. Now, if you were paying attention to NVIDIA, maybe you heard they were having some problems with the yield in terms of some chips weren't good, right? You produce a bunch of chips. How many of those chips are not proficient? What is the yield of good chips over how many you're making? They were having a problem. They had to fix some of that. They talked about that in the earnings call. But they're talking about, man, they are just pushing the forefront of what is even possible, which is why they're running into some snags. Their margins might be a little bit decreased there, and they have to deal with it. Narrow profit margins, a $908 million provision in the most recent period is what they booked. And yeah, that was part of the reason. But look at these chips, right? So in 2000, 15 million transistors. The Blackwell, and this is how big the chip is, all right? A penny for scale, 208 billion transistors from 15 million, right? That is just wild, man. And the chip's going to cost $40,000. Yeah, and the main issue with Blackwell was the complexity of using a new way of joining chips together that is offered by Taiwan Semi, the contract chip maker that produces most of NVIDIA's chips. The new approach came with hurdles including increased manufacturing complexity and war page that affected reliability and performance. Yeah, I mean they're pushing the limits, but that's what they're going to do, and that's why they're one of the most expensive companies in the world out there. All right, and this one's a tough one, man. For you Boston hockey fans out there in BC, we're coming into Labor Day weekend. No drunk driving, folks. We always say at the end of the show, especially on a nice long weekend like this, you're going to be out there. We're going to see you back Tuesday. Go out, have some fun. Just don't drink and drive. Go get an Uber. It's such a bummer, man. So you got Johnny, and I don't know how to pronounce the last name, Goudreau maybe, and his brother died in a bike accident last night. They were supposed to be in their sister's wedding today. Johnny plays for the Columbus Blue Jackets. He played for BC from 2011 to 2014. His brother played there as well. He won the Hobey Baker Award in 2014. This guy was a stud in college. He got drafted in the 4th round, I think it was. Hobey Baker in 2014, and they were riding their bikes last night. And unfortunately, there's somebody was driving, and the cops are saying they had alcohol, and both of them ended up dead. So that's a sad deal. I got a bunch of friends from BC, so they, of course, were talking about that today, and they were going to be in their sister's wedding today. And, that's a sad deal. So be safe out there this weekend. Have some fun. All right? We'll see you back here on Tuesday, but it's too easy. Just order an Uber. That's it. Make the decision. Don't let it happen because, everybody worries about getting pulled over for a DUI, but that's the real deal. That's the reason why you get pulled over, man. You got 2 people dead and somebody arrested, and their life's over too because of one decision. Uber shares, you're up by 1% right now, 72.86. This thing's been on quite a tear from their recent earnings. You back it up on a daily. Yeah, look at that jump from 55 up to 72. And you're kind of challenging those recent highs we've had. We jump over to the dollar index. Yeah, we continue to climb. I mean, look at gold holding up relatively well when you see. I mean, we're up a full penny from where we were. Excuse me, a full dollar, right? From 150 to 101.60. Now, the trend is lower lows and lower highs. But there's no pullback, man. There is no pullback in gold, right? Gold goes higher as the dollar weakens. When the dollar strengthens, gold consolidates near the highs. That is strength, man. Because what's going to happen when the dollar goes back to test that 100.50 area? Well, what's going to happen is it's probably going to blow through this 25.70 area for gold. And silver, not a huge pullback as well. Well off the highs of $32 that you made back in May for silver. Check out some of the other equities. Microsoft up by 7/10. You jump over to Amazon. They're up by 1.5% right now. Microsoft shares up 3/4. We jump over to Lululemon on their numbers. There's some volatility for you, man. Yeah, it seemed like the first reaction was the reaction. We're down by 1.75%. Not a huge move. You were down to 235 last night. You were up to 277 after their conference call, but they give it up. They're down by about $4 for Lululemon. You jump over to those Walmart shares. Walmart basically flat right now. Jump over to Target shares. I was in Target last night too. Of course, they got Halloween out, but they are stocked up, man, and ready for Christmas. It is intriguing to see. I always talk about we go to Target sometimes with Tommy, right? Checks out the toy section. They went lean and mean for a while, man. They were selling that inventory, and they have restocked back up. That store is stocked. It makes sense. We're coming into September. You got Halloween, but people are going to start doing Christmas shopping before you know it, right? We're going to be coming into Black Friday, Halloween, all that stuff before you know it. And Target is stocked up, and they got some decent deals. They do. Yeah, we saw in the last earnings. You've given up some of that. Target basically flat today. All right, what else we got pulled up here to check out on? Yeah, we talked NVIDIA. Yeah, how about this one? Bloomin' Brands, Outback. They're hiring Delta operations chief as their CEO. That one was out earlier this week, but interesting. When you talk about Delta, the problems they're having, Bloomin' Brands, let's see how they're doing. Reading that one earlier this morning. Yeah, look at this one, man, right? I've always been a fan of Outback. But boy, they got some problems going on this year, man. Down from $30 to $15 for Bloomin' Brands. Yeah, watch out there. Chipotle, after they lost their CEO, trading at 55.61, and we check out Starbucks. Look at that thing, man. Starbucks up another 0.5%. on the news that they're poaching Chipotle's CEO. And yeah, we'll see if that can be the turnaround. He seems to be the untouchable one in retail. We'll see if he gets it done for Starbucks the way he was able to get it done with Chipotle. But we get the markets just chopping around. We'll see where we go. You know, you make it to like 12 or 1 today, and we might just ease into the long weekend. S&P's up by 18. We'll be right back, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Excuse me. We got the S&P's up 28 points right now, trading at 56.38. We got the NASDAQ up 190. NASDAQ 100, that's a full percentage point. 19,585. Dow up 60 points. The Russell up by about 5. We jump over to crude. Yeah, $74 in the price of crude. Cheaper gas coming at you. We got gold down by $11 right now. You got a little bit of dollar strength today. There's your DXY. We make it all the way up to 101.64. We're trading at 101.51 right now on the dollar. And you got the 10-year negative by 2 ticks right now, and that is talking about a yield on that 10-year of 3.87%. We got the inflation number, PCE. The thing that I would hang on, man, on that PCE is the 3-month annualized average rate, as in you take the 3-month, you annualize it, 1.7% on core PCE, 1.7%. You take that 3-month average and annualize it. That means we move to jobs next Friday as we come into the long Labor Day weekend. And as I mentioned, right, sad deal in the NHL, man. They're supposed to be celebrating their sister's wedding today. 2 brothers dead, drunk driver. So be safe out there. You have some fun on the beach. You have some fun Friday, Saturday, Sunday night, right? 3 days. You got to love it. We'll see you back here on Tuesday. We're ready to do it all again because life's too beautiful, right? Make those smart decisions, man. They're easy decisions, but you got to make them. And that's a sad deal. S&P's up by 26. Stay tuned, folks. I see our man Basil Chapman. He's in there. He's getting ready in the Tiger's Den. He's going to be taking over next for the Tiger Technicians Hour. Have a great Friday, folks. Have a great long weekend. Thanks for tuning in. See you on Tuesday. Stay tuned for Basil. He's coming up now. Have a great one, folks.